but it took me 36 months to get to that outcome, and that is a very realistic example. What a lot of people get duped into doing is looking at non-performing notes as their strategy. So let's walk through this real quick. Okay. Performing. Non-performing. We're going to call this opportunity A, and we're going to call this opportunity B. All right? Now, I'm going to ask you guys to vote. You want to invest in A, you want to invest in B. So let me give you what A looks like. Okay? A is an investor loan on a fourplex. Value of the fourplex is $800,000. The first trust deed, which you'll be buying, is sitting at $550,000, and it's paying 9% interest only, and it is a 48-month loan. Payments are current. And so I'm going to do the math for you guys. 550,000 at 9 divided by 12. $4,125. Okay? And of a 48-month loan, you are 6 months in, which means you are going to be buying the next 42 payments. So that's approximately 3.5 years, okay? So in 3.5 years, you're going to get your 550 back, but 42 payments at 4125 means you're going to collect $173,250. Okay? Do not vote yet, because a lot of you are like, I choose A. Well, you got to see what B is, so don't vote yet. Okay, here's B. I've got an owner-occupied property. Okay. Person bought the house in 2021, which I refer to as the peak of the market, where market was crazy. Rates were at 2.5 or 3. Okay. So we have a 3% loan written on a house, and the mortgage amount on this property is $550,000. Okay. They have missed 24 payments, so they are 2 years in arrears. The lender has not yet started foreclosure, and you can buy this note right now for $200,000. Now you may vote. Do you want to buy note A, or do you want to buy note B? And there's no right or wrong answer, but I do ask that you all vote, okay? And I can't see who it is. Peter's just going to tell me A, B, A, B. I need all of you to vote. And I'll just wait until Peter starts giving me
a little Jeopardy theme song.
Yeah. Yeah. It's a simple A or a B.
We're heavy on the B's.
Heavy on the B's.
Heavy B's.
Heavy B's. Okay. Do I have any A's?
We have.
You know what?
3 A's.
3 A's. By the
4
way,
A's.
by the way, guys, let me see if I can simplify this for you, because I'm wondering if more of you are choosing investment B because you have 200 and you don't have 550. Okay? Let me tell you, you got all the money in the world, right? You got $1 million in cash. Are you still going to choose B? So again, if that changes your vote, go ahead and re-vote. Still heavy B's?
At this point, yes.
Okay. All right. So on A, We have $173,250 on a well-collateralized note that is investor-owned, okay? We've got 4 units, and each one of these units is producing $1,750 per month in rent. So $1,750 times 4. 1,750 times 4 is $7,000 per month. Which means our investor is producing $84,000 per month or per year in income on this investment. Our LTV on this deal, 550,000 divided by 800 is 68%. 68% loan to value. Very low. If this investor defaults, okay, if this investor defaults and we have to foreclose, he doesn't live there. So the methodology at which we use to go through the foreclosure is going to be a lot simpler, a lot cheaper, because it's not owner occupied, okay? If he defaults or she defaults and stops making this payment of $4,125, I can foreclose and I can own this fourplex producing $7,000 a month. Also, because it's an investor-owned asset, I have a UCC filing that says if he defaults, I get to collect the rents for the whole time that I'm foreclosing. So I keep cash flowing. Now, let's look at option B, okay? Hasn't made a payment in 24 months. Bank hasn't foreclosed yet, okay? So if you buy this note, the first thing you have to do is notice the borrower, okay? That borrower notice is going to take you 90 days just to notice the borrower that they're in default. After the 90 days, you're going to have to start foreclosure. Now, depending on where this is located, whether it be a judicial or non-judicial foreclosure state, you're going to be looking at between $7,500 to $18,000 to foreclose. Okay, so these are fees in addition to the $200,000 that you're going to have to put out chasing your asset. Okay, so you foreclose, it goes to auction. You set the bid for full debt. By the time it goes to auction, you're probably owed $600,000. Okay, so now we go to auction. Now this process here is going to take you 12 months. That's assuming that the borrower doesn't file bankruptcy. If the borrower files bankruptcy, this 12 months is going to become 36 months. Now, keep in mind also that through this entire process where you are feeding and paying lawyers and attorneys, somebody's living in this house for free. They're not paying you any money. So you've got no income, no cash flow coming through at all, okay? And right now we've been into this thing at minimum 12 months because that's how long it's going to take us to get it to auction and foreclose and get the asset back. Now, once we get the asset back, we now have to evict the tenant, who is the homeowner. And homeowners have rights. And so when you go to evict, they can now sue you, they can file bankruptcy again, but it's going to take you another 6 months to evict the tenant. Okay? So let's say that foreclosure went great, took you 6 months, you've got 18 months to get possession. Okay, great. We've got possession. Now, just to make this story much, much nicer, let's say that this is a lovely home down in Clearwater. I like Clearwater. Clearwater is one of my favorite beaches in America.
Call 911. Are you okay? Are you okay?
Oh. What is happening?
You just went out.
Yeah, I'm fine.
Good? Okay. All right. Clearwater Beach, Florida, one of my favorite beaches in America. Okay. So nice house, Clearwater Beach, probably a 4-bedroom, 2-bath, let's call it 2,300 square foot property, right? So now we need to get possession. We have possession. Unfortunately, the people who are living in it trashed it. So now we've got 2,300 square feet that has to be renovated. And because they really trashed it, we're going to have to spend about $75 a foot to rehab it. So our rehab costs 2,300 square feet. Let's go 2,300 square feet at, let's call it $35 a foot. Yeah, okay. So we're going to spend $80,000 on rehab. Okay, so this is rehab. These are our attorney costs here. So purchase price of the note, attorney's costs. Oh, and then we had eviction costs. That's going to run us about $7,500. So we've got attorney's costs, we've got eviction costs, and we have rehab of $80,000. Okay. Now we're going to list it with a local agent. We're going to price it at $599.9. Okay. And let's say that we get it. Well, we're going to have 11.5% in sales costs. You've got 3% to the listing agent, 3% to the buyer's agent. You've got excise tax. You've got the 3% that the buyer is going to want you to put down. So we just run everything, let's call it 11%. Okay, so we've got $65,989. These are our costs. So out of that, we're going to net $533,911. $533,911. Okay. Now, out of the $533,911, okay, we're going to subtract our rehab costs of $80,500. We're going to subtract our eviction costs of $7,500. We're going to subtract our foreclosure costs of $18,000. And then we're going to reduce our purchase price of the loan, which was $200,000, which means we made, hang on, let me start over. 539,101 minus 80,500 minus 7,500 minus 18,000 minus, okay, 427,911. 427,911, and then we paid $200,000 for the note. Okay, so we made $227,911 in profit on a $200,000 investment, which sounds really good, except it took us 36 months. So we've got to take our return, 227,911, and divide it by 3. So we made $75,970 per year on a $200,000 investment. $75,970 divided by 200,000, which means we made a 37% yield. Okay. Now, on this side, we made $227,000 in 36 months. On this side, we made $173,250. 37% yield versus 9% yield.
What was the time frame on A?
A is 42 months, and we've been collecting a check every month for $4,125. On B, we did not get paid. We got this lump sum payout, and we got it on the 36th month. So we've been working for 3 years, putting money out, paying everyone else. Our payday came 36 months later. So I want to ask you guys again. Option A, option B. Again, while you're thinking about your answer, I want you to think about the brain damage that you've been through, okay? You had to file the notice. You had to hire an attorney down in Florida. I didn't even talk about the now increased cost of insurance on these properties in Florida. Florida insurance premiums have gone up 300% because of all the hurricanes going on down there. I didn't even talk about that. We have the risk of bankruptcy. If these people would have filed bankruptcy on us, they probably could have got another 24 months of not making payments. They're owner occupied, so they have more rights in the deal than you do. Florida's a judicial foreclosure market. So yes, your yield was substantially higher, but at what cost? Now, some of you are looking at option B and going, oh, you've inflated all of those numbers. Guys, I've been lending money for over 20 years. I have foreclosed on more properties around this country than I want to talk about. But that's the business that I'm in. That's fine. So these are really good, legitimate estimates of what it's going to cost to get this deal and get paid on it. Meanwhile, I've got this deal over here. The minute I buy the note, I'm getting payments. And if the borrower stops paying me, I get even more payments. And if he contests the foreclosure and files bankruptcy, the judge is going to throw it out because he's got all of this money that he's got to pay all of his other creditors. He doesn't live there. So I'm going to ask you again. Vote again. Option A, option B.
Well, so far everybody's jumped back over to A. It's A's across the board.
Okay. It's A's across the board. Now, some of you might be looking at this and going, okay, Lee, that's an extreme example. You have an agenda here. You have an ulterior motive. I really don't, you guys. I have been originating notes for over 20 years. I've been buying notes for over 20 years. This, if you brought me this, I am so not interested in that deal. I can't even tell you. But Lee, it's 37% margin. I get it. This is monthly consistent cash flow. I can't buy groceries with margin. I can't put my kids in college with margin. I can't cover my monthly mortgage payments with margin. Yes, I have upside, but I want the cash flow. That's what I'm interested in, is the cash flow. And that's why when I meet people, we were just recently at an event, and we were there as an originator of mortgage notes who sells performing notes secured against investor-owned properties that when you buy them right now, you step into cash flow. And people are like, oh, no. I only am interested in non-performing loans where I can negotiate like 37% yields. Okay. How much time you got? How much cash can you put at risk chasing this outcome? What is this outcome going to cost you? So again, guys, I do both, okay? I buy performing notes on cash that I need to produce an income on a monthly basis, okay? These investments pay my bills. These investments buy me toys, okay? Because yes, this $227,000 lump sum payout, that's awesome. But it took me 36 months to get to that outcome, and that is a very realistic example.